Here's the thing about law firms. They are incredibly complicated to run and operate, and they're difficult to make profitable at a very high level if you don't do it correctly. So as you look at the earnings per employee for law firms, the question is, what should it be? Hey, welcome to this week's episode of the Your Practice Mastered podcast. My name is Richard James, and today we're going to cover earnings per employee for a law firm. Now, here's the thing. There's a lot of garbage out there on the internet from thought leaders telling you what your earnings per employee for a law firm should be because they generalize it and they put you in the pile with all other businesses. Just recently, a member had come to me and said, hey, Grant Cardone said that if you're not earning more than $125,000 per employee, you're going to go out of business. I fundamentally understand where Grant is coming from, and I get how he remained consistent on that generalization. The challenge is it's just not true for law firms. And so I don't think that he took everything into consideration. While it is an interesting indicator, this revenue per employee, I will show you examples whereby you're going to see that I can have a really, really low revenue per employee, yet a really, really high profit margin. So as you look at the earnings per employee for law firms, the question is, what should it be? The answer, not to sound like an attorney, but it depends on a number of things. The first thing it depends on is your practice area. So let's look at the different practice areas. So there are basically three that we're going to cover to keep it really simple. And the three are hourly, contingency, like a PI, workers' comp, or other type of firm, or a flat fee firm. In hourly, I could tell you that I want your attorneys to be generating $700,000 kind of at a minimum, or let's call it an average, and I want your paralegals generating $350,000 inside of your law firm. So earnings per employee, nowhere near the 125. Certainly Grant was right. Can't be less than 125, has to be significantly higher than 125. But if you use that 125 for a metrics, boy, things could get off really fast. So you can't just look at it, if your practice area is hourly, by this earnings per employee crap that they like to throw out as a generalization. This is why law firms get in trouble when they listen to these generalized concepts. The second type is a contingency firm. Now, I have known contingency firms. We have one right now who won the Entrepreneurial Attorney of the Year last year, David Marte, and he only had a couple of employees, yet generated north of $1 million in gross revenues, and he was able to keep a very high percentage to the bottom line, higher than average. And the reason why he was able to do that is because of the nature of contingency cases. Case values tend to be higher. Workflow that's required can be managed by a smaller number of employees. Thus, you can gain around the $300,000 per employee mark. I'm sure there are PI firms that do better than that, and they have a higher per employee mark. I'm sure there are PI firms that don't do as well as that. I've met with one not too long ago that they were generating $12 million in sales, yet they didn't make a nickel in earnings. The reason had an awful lot to do with two factors: their overall cost per employee, they weren't very efficient, and two, their debt structure. That's a conversation for another time. The third type of firm that we're talking about is this flat fee firm, right? Criminal, immigration, bankruptcy, estate planning, tax resolution, these come to mind when we think about flat fee firms. Now, it depends on a number of factors, but the general range should be somewhere between $80,000 and like $175,000. If you can get north of $175,000, that's really, really good, and there's probably only one way to do it. And if you're going to be at $80,000, you better be doing it one particular way. Which brings me to my next point. The it depends has a lot to do with where your labor costs are coming from. So in the global economy that we're in, many law firms use labor in places like Mexico, Central America, the Philippines, etc. And if these employee teams are run with a good quality system with the proper management structure, they can be very effective and they could do so at a much lower cost. Arguably, Mexico is more expensive today than it was 5 years ago. The Philippines is more expensive today than it was 5 years ago. Why? Well, more people are doing it. Those countries are getting smarter and they're trying to shorten the gap. So you still win. You just don't win as much as you did a number of years ago. That being said, you could easily have a bankruptcy firm that generates $175,000 per employee if you use a high percentage of your labor in another country like Mexico or Central America. We have companies that are doing just that, staffing through our company, the staffing room. It's where we staff in Guadalajara and Puerto Vallarta, Mexico. We have offices down there, and we staff for our clients so they can start to achieve these goals. Now, here's the thing. Is it possible to be doing $80,000 an employee and still make really high margins? The answer is yes. We have a client who's generating multiple 8 figures, so like $20+ million. They have about 300 employees. You take $24 million, you divide it by the 300 employees, you got about $80,000 per employee. How is that possible? Oh, by the way, they have a 40 to 45% profit margin. How is that possible? Because they've got excellent systems. They have low labor costs because the majority of their team is overseas in Mexico, and they understand how to pull profit from the business. So here's the real question. What is the profit margin for your law firm? Put aside this earnings per employee number. It's not really as relevant as you think that it is. And if you're not careful, you're going to find yourself with the overgeneralization of it is going to get you in trouble. So what must you do? Well, you must make sure you have financials on a regular basis. I see my P&L updated on a weekly basis. I prefer if you have at least monthly profit and loss statements, balance sheets, and you see expenses go through your firm on a weekly basis by reviewing your credit card statements. And I'd like to see you do a quarterly audit of your expenses to make sure you get rid of anything that shouldn't be there every single quarter so that we can maximize profitability. That's called save your way to solvency. I'd also like to make sure you maximize your conversion rates through your PCLC of the number of leads you get, the number of sets you have, the number of hires you have. And so I'd like to make sure that you sell your way to success. It's called sell your way to success, save your way to solvency. And then I want to make sure that all the money that's tied up in your workflow gets pulled through the business in a profitable way. And then I want you to look at your overall profitability, your overall owner's benefit to determine if it's over the 30% mark, which is where it should be in a law firm, depending on size. More if you're smaller, possibly less if you're larger, but not always. Like I said, we have a firm that's doing multiple 8 figures and they're profitable at that 40 to 45% range, and they're not a contingency firm. They are an operational flat fee firm and still accomplishing these goals. If you don't know your earnings per employee, hey, it's a good exercise to do. But what you shouldn't do is you shouldn't overgeneralize your earnings per employee just because somebody said it on the internet. That doesn't make them a subject matter expert in running a law firm. Running a regular business is hard. Running a law firm, especially a profitable one at scale, is damn near impossible if you don't know what you're doing. And if you used overgeneralized concepts like earning per employee and you don't go deeper based on where you are, the practice area you have, and where your labor's coming from, you're going to get into a lot of trouble really quickly. So identify your overall profitability. Sure, look at your average earnings per employee, but take in consideration your practice area. Use some of the guidelines here. As always, you can ask any questions in the comments. You could reach out to us directly. And if you'd like more information about how to run a profitable law firm and not depend on a single number like earnings per employee, visit us at thelawfirmsecret.com. We've got all sorts of free resources there that you'll be able to tap into. We'd love to walk alongside you as you build a profitable law firm.